Before we get into the charts on the Euro USD, let's look at this article from Yahoo Finance by way of Reuters. ECB raises rates to 22-year high in no mood to pause. Now, it was an interesting week because you had the Euro ECB raising rates. You also had the U.S. Fed, Jerome Powell, putting a pause on rates, although he said two more rate hikes are probable later this year. Let's get into the article. The Euro Central Bank raised borrowing costs to their highest level in 22 years on Thursday and left the door open to more hikes. This marks the 8th consecutive time that the ECB raised rates by 25 basis points to a high of 3.5%. The key ECB interest rates will be brought to levels sufficient restrictively to achieve a timely return of inflation to the 2% medium-term target. This is the same target that Fed Powell has as well, and will be kept at those levels for as long as necessary. This is Christine Lagarde, who's the ECB president, said at a press conference following the decision. The ECB represents 20 countries that share the euro. Also said it expected inflation to stay above the 2% target through 2025 and hit it once again at more rate hikes in the coming months. The ECB's latest hike followed Wednesday's first pause in U.S. rates in over a year, a signal to investors around the world that the current tightening cycle across developed economies is nearing an end. Even if a little more U.S. tightening is still possible, this is getting to the potential two additional hikes later this year in the U.S. Bearing a material change to our baseline, it is very likely the case that we will continue to increase rates in July, Lagarde said. We are not thinking about pausing, as you can tell. So, are we done? Have we finished the journey? No, we are not at our destination. Do we still have ground to cover? Yes, we still have ground to cover, Lagarde said. So let's get into the charts. We're going to start with the monthly chart. And as you can see, price bottoming back in September, and it's been in an uptrend since then. Now, you could say potentially that this is just a correction before the next impulse down, but in trading, you got to go with the trend. At least I try to go with the trend. And right now the trend is up, although it's been basing for the last several months. However, the chart suggests there's room to the upside up to the monthly sellers at 1.16. Let's go down to the weekly chart. And this was the basing that I was referring to. And let's put that in white. Now, the best way to play this is to play the extremes. Case in point, let's scroll down to the daily chart. And you can see we had a false breakout to the downside where there were buyers waiting at the 1.0525 level. And that was good for, wow, about 500 pips. Now the bias is to the upside despite price being range bound. How do I know that? Well, we saw that on the monthly chart as prices are moving higher. But you can simply also use moving averages. This is the 200-day moving average, and it is curling, bottoming, and moving up right from when it was moving down. So for me, what I'm looking for is price to break the 111 area, as that's where we had the recent selling, triple top, however you want to describe that. And when I look to the left, what do I see? I see what was a support level becomes resistance. And that's why we have several times in which price hit it or came near it and then sold off. So if the Fed's pause and the ECB continues to raise, this level at 111 is going to get breached. And when it gets breached, you have some resistance as price moves up. But the liquidity is going to be found in this monthly sellers level. We breached 111. The next target becomes 115. Let's scroll out to the weekly so we can see that a bit better. Again, we breach 111. The target becomes 116, as that's where you should unload if you are in long on the Euro USD. Thanks for watching. Subscribe. Please like the video.